Well, ho, 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 and Merry Christmas. It's Andy Closer, Andy Claus, Santa Closer, whatever it is, Andy O'Fee from Crump Mortgage. I hope everyone's having a great Thursday. Some interesting things came out today. Obviously, we've heard some news about the vaccine being signed off on by the FDA, looking for approval on that. We've seen stocks come down a little bit this morning, but the market is kind of hanging in there. We'll get back to that in a second. But the big news today is that CoreLogic released some data in regards to the amount of home price appreciation that we're seeing. Now, home prices have increased by approximately 7% nationwide, but the metric that's added into that is amortization. So it's basically showing the amount of money that people are paying down their mortgage combined with the amount of prices going up, and they're showing just under 11% in appreciation. Now, 63% of the homes in the United States that have mortgages now have approximately $1 trillion in equity built into that property. If you average that out, that's about $17,000. The point of this is that if you remember your client that purchased a home that had mortgage insurance on their loan, it is a great time to evaluate whether or not the equity in their home is significant enough to get to them to 80% and potentially lower their rate. Double whammy, saving them money on rate and saving them money on mortgage insurance. What a great way to make a phone call to a previous client just to see what's going on. Now, I have a quick tool here that I can use to run estimates on. You guys as realtors also can run it with comps on your side also, but it's a really quick and easy way of making a contact with a previous client, as well as for me to contact previous clients to see if we can help save them some money. That's huge right now, just under 11% in overall equity gained. That's the most we've seen in the past 6 years. Here's a quick market update that let's talk about rates. So current coupon mortgages right now are continue to hang in right above the 25-day moving average. These averages are numbers that we track all the time to keep our eyes on whether or not we break down and they trade down through a technical level, or they can bounce back up to the resistance level of higher prices. Higher prices, lower rates. So we're going to keep our eyes on that. Obviously, we're looking for more news in regards to the FDA. I think that's going to be coming out today at some point. I'm sure I'll post something in regards to that. Again, if you have a client that you know in the past couple of years that have purchased a home with mortgage insurance, it doesn't hurt for them to take a look to see if they've developed enough equity in the house to remove that MI and help them save money and potentially lower their rate, as well as even shortening their term. This is Andy O'Fee, the Yankee Closer. Give me a call if you have any questions. Bye-bye.